Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. And with a down market, I think today is a good time to go over companies that are a little bit safer on the risk-reward spectrum. Company I'm going to talk about is Alphabet. This is now a value stock among big tech stocks, and I think the opportunity for growth is still a lot higher than a lot of investors think. And with a great balance sheet, great cash coming into the business, this is a safer investment than a lot of investors might think. Let's look at the company's business strategy. We know Alphabet as a search company with Google, but it is so much more than that. Now you have the Android business. They're making hardware along with selling software. You also have YouTube, which is actually a bigger business today than Netflix, both in revenue and the amount of time that people are spending on the platform. Google Cloud is a phenomenal growth business. And then there's Waymo. The narrative is that Alphabet is a slowing company, not growing like it once was, but that's really not true. The company grew revenue 13.9% in 2024, and that is a great growth rate for the value that we get as investors. But let's get through some of the company's growth opportunities first. The first is the opportunity in search. Search is really the core business for Alphabet, growing at double digits. This is the cash cow that funds everything, all of the growth opportunities like you have with Waymo. And this is still a double-digit growth business long-term. So love the economics here. Number two is YouTube. Alphabet reports the YouTube revenue from advertising, but doesn't actually directly report the revenue that they get from some of the premium subscriptions and other things. You add those together and YouTube is actually a $50 billion plus business today. Like I said, it is bigger than Netflix, and it has the opportunity to grow as an aggregator of content on TV with YouTube TV and all the optionality that they have to pull channels together there. The cloud business is another phenomenal growth story for Alphabet, growing 30% per year, and it could do that for a decade or more on the back of all the growth that we've seen in artificial intelligence. This is leveraging all of the infrastructure that Alphabet has been building for more than 20 years to make search just a little bit faster for everyone. Now that infrastructure is paying off with artificial intelligence. And the one thing we don't know a lot about their financials, but Waymo was valued at $45 billion in its last funding round in 2024. That could be $1 trillion business. But of course, there are risks like there are with any company. Alphabet is an advertising-based business. Advertising businesses are going to benefit when companies are spending more to acquire new customers, and they're also going to get hurt more when that spending declines if we go through some sort of a recession. Regulators have also been eyeing breaking up Alphabet. That actually may unlock a little bit of value, but short term would probably be negative for the stock. And of course, there's potential competition from artificial intelligence. We've been hearing about that for years, hasn't really manifested yet, but is absolutely a risk to look at long term. But what's my prediction? I think Alphabet is a phenomenal risk reward for investors. This is a company that is still growing, has a dominant position in multiple different products in the market. Search, YouTube, Waymo, and even the cloud is really phenomenally positioned. And management is buying back stock, could get even more aggressive with those buybacks if the stock starts to fall. So from a safety perspective, you get the stock at a pretty good valuation at about 21.6 times trailing earnings and actually under 20 times forward earnings. So what's the recap? Alphabet is a leader in technology, huge businesses with massive moats around them, and it is an aggregator in multiple places in the tech market. I think that's a great position, has a solid cash flow business. Now at the Motley Fool, your comments make us all smarter, so leave your comments and research in the comment section below and let us know what you want us to tackle on Crunch Time next. And don't forget to check out fool.com/invest for the top 10 stocks to buy right now. Thanks for watching. We'll see you here next time.